In this video, we'll discuss fintech and cybersecurity. This video was brought to you by the National Cybersecurity Training and Education Center out of Whatcom Community College. NCyTE Center and this material is based upon work supported by the National Science Foundation. My name is Philip Kreger. I'm a professor of cybersecurity at Embry-Riddle Aeronautical University in Daytona Beach, Florida. So as an overview, in this video, we'll be discussing the definition of fintech, what comprises fintech, examples of fintech in our daily lives, potential threats, that is cybersecurity threats to fintech, examples of cyber attacks on fintech, and finally, a wrap-up. So why are we discussing fintech? Well, the Cybersecurity and Infrastructure Security Agency identified 16 critical infrastructure sectors whose assets, systems, and networks, whether physical or virtual, are considered so vital to the United States that their incapacitation or destruction would have a debilitating effect on security, national economic security, national public health or safety, or any combination thereof. And one of these sectors includes the financial services sectors. And the financial services sector represents a vital component of our nation's critical infrastructure. Large-scale power outages, recent natural disasters, and an increase in the number of sophistication of cyber attacks demonstrate the wide range of potential risks facing the financial services sector. The financial services sector includes thousands of depository institutions, that is, banks, providers of investment products, insurance companies, or other credit and financing organizations, and the providers of the critical financial utilities and services that support these functions. But what is fintech? Well, fintech is essentially a combination of two terms: financial technology. It's a catch-all term for technologies that augment, streamline, or digitize the financial services industry. Fintech includes mobile transfers, end-to-end user systems, and electronic payment systems to cryptocurrency, as well as algorithmic and automated trading of money and stocks. Now, some of those terms in there you might not recognize, but I'll define those shortly and give examples. And finally, fintech also enables depositing checks, moving money among accounts, paying bills, applying for financial aid, or sending money to friends and family. Now, some of you thinking about what you've done over the last couple of weeks or month probably realize that some of those things listed in that last bullet are things that you've been involved with. So you've already probably been involved with fintech. For example, you may have deposited your paycheck by snapping a photo on your smartphone and uploading it to your bank's mobile app. You checked an account to gauge your monthly entertainment budget. At dinner, you and a friend split the bill using a payment app. Later, you tapped your phone at a gas station and paid for your fill-up. When it was time to head home, you hopped in an Uber where you paid for the ride with a stored credit card, or even in Bitcoin. These types of transactions are becoming more and more common as fintech pervades our society. This graphic gives you examples of certain segments of fintech and what comprises those. For example, the insurance industry. I think we all have insurance. But fintech in the insurance industry includes payments, financing, cross-process support, financial information, investments, and advisory statements. And in banking, private, retail, and corporate banking. And there's also complementary service, for example, peer-to-peer lending or peer-to-peer donations, as we'll see shortly. And then there's the personal finance management, including income, capital, investment, standard of living, and assets. And notice up there that I skipped this e-commerce, which includes business to business, business to customer, and customer to customer. I'll go into that in more detail shortly. So looking at business to business, in the olden days, let's say back in the 60s and 70s, not everyone had access to the internet, and we don't have the internet as we have it today, and we don't have the type of technologies, including smartphones and laptop computers, that allow us to connect freely with our banks. So back then, we had business to business, or in this case, this example, we're looking at transfers of money from bank to bank. So Bank 1 sends information to Bank 2, who then sends the information back to the first bank, and this is called B2B or business to business. Behind most international money and security transfers is the Society for Worldwide Interbank Financial Telecommunications, or SWIFT. SWIFT is a system that is a vast messaging network used by banks and other financial institutions to quickly, accurately, and securely send and receive information such as money transfer instructions. More than 11,000 SWIFT member institutions sent over 35 million transactions per day through that network in 2020. The organization recorded an average of 42.5 million messages per day on a year-to-date basis in March of 2021. traffic grew by almost 10% compared to the same period of the previous year. So SWIFT is an important part of bank-to-bank transactions, supporting the free and secure transfer of money from business to businesses and banks to banks. But then in the 90s, we started being able to communicate electronically with our banks. And so our banks could send us information, our banks could connect with us, but also we could connect with our banks over the internet. And this is called business to customer, or B2C. And finally, let's think about omitting the banks. And this is relatively recent, where now we can have money transfers between people. And so we can send money to a friend, and our friend can send money back to us. And this is called customer to customer, or C2C. B2B, B2C, and C2C are all parts of fintech and fall under the rubric of e-commerce. Now, we've already kind of touched on this before, but I want you to think in the last few weeks or month, have you been involved in fintech? Well, probably so. There are thousands of apps that allow you to contact your bank or your credit card company to either make payments, see what your balance is on your checking account, and to transfer money from account to account. I normally do this probably once or twice a week. These are all part of fintech. Some of your younger folks may use things like Venmo. Venmo is a peer-to-peer payment app available on smartphones that allows for the quick and easy exchange of money directly between individuals. That's that C2C, or customer to customer, that we saw before. Likewise, we have things like GoFundMe, which is a crowdfunding platform that allows people to donate money to individuals who are requesting assistance. Unlike donating to an organization, the money goes straight to the campaign owner. Again, this is one of those customer-to-customer transactions. And finally, probably the granddaddy of them all is PayPal. PayPal is a financial tool that lets you conduct transactions online without entering your financial details into every website that you deal with. You link your credit card and/or bank account to PayPal and then add or withdraw from a secure money pool, shop at retailers who accept PayPal, or send money to other users. But fintech is much larger than that. And we're going to be touching on some of these in this video and the second video. For example, we have this thing called blockchain. This is so important that I'm going to be spending an entire video on blockchain and digital money. We also have payment systems, money exchanges, we have financial research, online banking, online investments, and again, we have crowdfunding. So fintech is a very broad category of services. Now, in all the other videos, we've seen how as information communications technologies grow and permeate our society, is that we have more and more cyber attacks performed by malicious actors. Well, how big a problem are these cyber attacks on fintech? Well, according to Security Magazine, the banking industry saw almost a 1,400% increase in ransomware attacks in 2021. So if you don't know what ransomware is, I've got an entire video that I will link in the YouTube page that points to that video, but I'll be explaining what ransomware is and the threat vector for that shortly. So how do malicious actors attack fintech? Well, the number one attack vector or threat vector, that is how these attacks are performed, is through something called social engineering. And social engineering is a manipulation technique that exploits human error, that is behavior, to gain private information, access, or valuables. Now, I have an entire series of videos on social engineering, that is, what is social engineering, how to identify it, and how to protect yourself. So I'll also link those videos on the YouTube page. But here's an example of a text message that I received from the number up there. But let's look at what this text message says. The number is the area code, and you see it's 571-360-3379. Call us back as there is a legal case been filed on your name. Kindly call us back so that we can discuss about your legal case and take care of this matter. If we don't hear from you, then there might be a warrant against you and you might get arrested. Now, this is very easily identified as social engineering. And the motivation for the actor, the malicious actor, sending this text is that they want information or they want money from me. But some of the key factors that really set this off are, notice that it says a legal case, but it really doesn't tell me what type of legal case or whether it's a criminal case or a civil case. So the information in this text is nonspecific. Also notice that it tries to inject fear in me, is that I will be arrested if I do not call that number. Moreover, if you look back at the text, the legal case been filed on your name, first of all, that doesn't make any sense in normal English. So it's probably somebody who's doesn't speak English as their first language that wrote this. So I'm very suspicious of this. This is some type of social engineering to get me to call that number. Here's another one. Speaking of Venmo, I received this text that says, you have one payment of $850 pending, collect yours here. And then there is the link that I'm supposed to click. Now, why do I think this is social engineering? First of all, why would somebody be sending me a payment of $850? I know nothing about that. Second, you would think that this link for Venmo would go to Venmo, but it goes to venbme.com. Although it does have Ven at the start of that. So that's suspicious as well. Also, just the way you have this weird capitalization, no one does that. That's how you capitalize the title of a chapter in a book. So this is very suspicious. And what it's doing is it's relying on people being greedy, in this case, me, and that I'm able to receive a payment of $850. And all I have to do is click on this link and probably put in a lot of personal information. So another good example of social engineering. So getting back to ransomware. Ransomware is malware. But how does the malicious actor get this malware or ransomware on my computer? Well, you see the malicious actor there on the left and you have the user on the right. And so normally there may be some kind of text message or an email message that has perhaps an attachment that appears to be a PDF or it appears to be a Microsoft Word document, but in reality, it is malware. And so if the user on the right isn't careful and isn't suspicious, she may click on that, let's say, email attachment, which then goes on to infect her computer. Now, if this is in an office setting, as you see here, once you attack one computer, a lot of malware has the capability of using vulnerabilities in various operating systems to hop along the network. So once one computer is infected on the network, it goes to a second computer, another computer, another, and so on until all the computers are infected. But what does this ransomware do? Well, here's how it works. So the malicious actor, the bad actor, tricks an employee into downloading ransomware, for example, through social engineering and including malware that appears to be a legitimate document attached to an email. Once that employee downloads and clicks that file, it infects that computer. And specifically, it proceeds to encrypt, that is, scramble all of the data on that computer. Now, ransomware uses public-private key encryption to encrypt the data on the computer. If you don't know what that means, I have an entire video that explains not only ransomware, but also how encryption works and specifically how public-private key encryption works. But suffice to say that once that computer's data is encrypted, it cannot be read by the user or anyone else until it's decrypted with one of those keys. Some ransomware can spread to other computers on the network without any intervention from a user. That is, it spreads automatically based on vulnerabilities in the operating systems of other computers residing on the network. And finally, after the computer is encrypted, the bad actor demands payment for the private key. That is the key, the only key that can decrypt the data. And in order to retrieve that data, the company then pays the ransom and the bad actor then sends, the key, which then allows the company to decrypt that data. And the reason there's a question mark there is that that's not always how it occurs. Again, if you want more information about ransomware and encryption, I'll include those two links in the YouTube description. But if you want to see what encryption looks like, this is some plain text. And this is unencrypted data. And you notice that we can read the words at the top, credit card, type of credit card, the number, and so on. And also we can read the numbers and the types of credit cards and the names associated with each of those credit card numbers. Now, once text is encrypted, it looks something like this. So I've actually taken this information and I've encrypted it. Now, it's a bunch of gibberish. You can't read it. And this is something that we in cybersecurity use all the time to protect ourselves. But it can also be used as a form of attack through ransomware. But in order to decrypt a message like this, you need that key, which normally means that the company has to pay for the key in order to go back to the original data. Now let's look at some examples of cyber attacks on fintech. A large one that happened just a few years ago, I believe it was 2017 or 2018, was the company Equifax. And Equifax is a consumer credit reporting bureau, one of the big three in the United States. And they have a lot of information on everyone in the United States and actually in other countries around the world. But it knows everything about loans that you've made, the jobs you've had, things that you've purchased, loans you've got for your cars, your mortgages, all kinds of things like that, including information on the credit cards you currently hold and have held in the past. So a malicious actor was able to gain entry into Equifax. Now, the cause of the data breach was a vulnerability in the company's website portal that was left widely known and unpatched due to failures in Equifax internal processes. That is, they knew there was a vulnerability, but they didn't fix it for several months, which then allowed the malicious actor to breach the network and sit there. Equifax also failed to renew an encryption certificate on one of their security tools. This allowed hackers to undetectably extract data in encrypted form for months. Now, recall the data that I just described that resided on these servers. Very personal, financial, technical information. Personal identifying information, that is PII, from 143 million U.S. accounts, 200,000 credit card numbers was stolen by the malicious actors. And as it turns out, this data never showed up anywhere on the internet, or at least it's never been posted. Why is that? I don't have the answer to that. Finally, realizing that the breach was their fault, Equifax settled with the Federal Trade Commission, the Consumer Financial Protection Bureau, for up to $425 million to help people affected by the data breach. So this single breach affected a lot of U.S. users, and in fact, I was subject to this data breach because I received a letter indicating as such from Equifax. Luckily, nothing bad came from that, as of yet. Other examples of cyber attacks. Travelex Exchange Company was infected by ransomware, but initially refused to admit it had been infected. A lot of these ransomware attacks, I would suggest, are way underreported. Travelex first reported the hack as planned maintenance before coming clean a few days later. Suspending its travel money services, it caused several United Kingdom banks to shut down their currency exchange operations as well, resulting in millions of dollars in losses. Another attack was on Diebold, which controls around 35% of the global ATM market, owned up to a ransomware attack in May of 2020. Diebold said that its customer networks were unaffected by the attack, which broke into its corporate operations. Other examples: Postbank, the banking division of South Africa's post office, had to replace more than 12 million of its customers' cards after a group of its employees printed and then stole its master key. So this, in its essence, was an insider attack. And as we've discussed in other videos, is the number one threat to an organization is from an insider, because normally they have physical access, they can come into locked doors, they can go into secure places, and also they usually have an account on the network. Moving on, the master key, a 36-digit code, allows the holder to decrypt the bank's operations, modify the bank's systems, and generate codes for customer cards. Rogue employees used the key between March and December 2019 to access accounts and make more than 25,000 fraudulent transactions. Again, this was from a rogue insider. Now, to summarize, fintech is just a conglomeration of the words financial and technology. Fintech is driven by computerization, and banks use fintech for back-end processes, behind-the-scenes monitoring of account activity, for instance, and consumer-facing solutions like the app you use for checking your balance. Individuals use fintech for everything from tax calculations to dabbling in the markets with no prior investing experience necessary. Fintech means that these institutions, as well as the consumers, are highly networked. We have business-to-business transactions, business-to-customer, and customer-to-customer. And this is going to become all more common as information communication technologies permeate our world. And as we saw with several examples, fintech is a target for malicious actors due to money. These malicious actors are driven by greed, and often the threat vector most likely to occur is through social engineering, and ransomware, according to the FBI's Internet Crime Complaint Center report, is the number one type of cyber attack that has occurred over the last few years. Now, in the next video, we're going to be talking about cryptocurrency, and you've probably heard about this, And you might even own some cryptocurrency, but you've probably seen the terms Bitcoin, Dogecoin, Ethereum, etc. In fact, there are hundreds and hundreds of different types of cryptocurrency. Now, cryptocurrency, so as you see here, here's a graphic that's showing various types of cryptocurrencies, but that's not what cryptocurrency is. This is just a nice little graphic that's showing you that cryptocurrency is actual money, but there's nothing physical about it. And we'll go more into that into the next video. Here I've identified some of the 200 top types of cryptocurrency, but you see at the top we have Bitcoin, then Ethereum, and it goes all the way down to number 21, Litecoin. And then I went to the bottom and you see there are many, many types of cryptocurrency, all of which can be used to buy services in a lot of different places, but they're not backed by the US government currently, although there are some countries that have started accepting cryptocurrency for various types of payment. But you see, it's not just Bitcoin. There are a lot of various types of cryptocurrency. And finally, in the next video, we'll talk about a key technology that is being used more often in the cybersecurity domain, and that is something called blockchain. And we'll discuss how it relates to fintech and how it is being used in other domains for cybersecurity. It's going to be quite the video, so make sure that you watch the next video. This video has been brought to you by the National Cybersecurity Training and Education Center out of Whatcom Community College.